Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to CSC Good Night. Today is Friday, August 22nd. I'm analyst Jiang Jida. Before we start, please remember to like, subscribe, and share. If you have questions or complaints, feel free to comment. If we don't have time to address your concerns today, we'll share and discuss them at next week's investment meeting. Just a reminder, at this stage, I'll be co-hosting the CSC Good Night show with other instructors. If we're doing a live broadcast this week, usually next week I'll be serving at a branch office. Coincidentally, next Wednesday, I'll be holding a small investment seminar at the Taipei branch. If any of you are interested, you can contact our online assistant or the relevant contact person. So, moving on, next Wednesday, August 27th, I have a seminar in Taipei. Alright, let's get back to today's focus. Since today is Friday, everyone can relax a bit. The most important thing tonight is the speech by Fed Chair Powell at the Global Central Bank annual meeting. There actually aren't any major economic data releases scheduled for tonight, so everyone can just enjoy themselves. Good evening to my Daisy, good evening to Hui Wan, and good evening to Minyan. And also, good evening to Zai Fei to you, and who is this? Kwang Fudahan, good evening. Also, Yushan Luanjin and Zai Mail, good evening. Good evening again to Zai Fei to you, and LSF, good evening, good evening. So today, even though there's not a lot of data, there's still a lot of information I want to remind everyone about. Even if there aren't many data releases, the important events are what you really need to pay attention to and be extra careful about. Good evening to Anthony, and also good evening to Liao. Alright, the first investment focus for today is to take a look at tonight's annual meeting speech. The EU mentioned a good tax rate. So tonight, of course, what's really important is the speech by the Federal Reserve at the Global Central Bank annual meeting in Jackson Hole. Now, will the content of his speech lean more towards a hawkish stance? Will it be more hawkish, more dovish, or even neutral? This is the key focus that the market is paying the most attention to. Based on these focal points, we want to remind everyone that both the US and Taiwan stock indices are currently at relatively high historical levels. So, in reality, even a slight disturbance could easily trigger a significant market correction. Everyone should be mindful of this when considering the proportion of stocks they hold in their portfolios. No matter what, try not to go all in. Avoid using an all-in approach. You might want to reduce your holdings to around 70% or 50%, or keep about half of your positions to handle whatever happens after Powell's speech tonight and see how the market reacts. At that time, making moves like buying on dips will be a safer strategy. Of course, today I'll also update everyone on some of Powell's positions. Besides his speech, it's also very important to pay attention to the stances of many FOMC officials, whether they have voting rights or not. Before tonight's meeting, they made some early statements about their positions, so whether they lean more hawkish or dovish is especially important. In addition, regarding the trade war, let me add something for everyone. Today, the EU mentioned a very favorable tariff rate. This rate, 15%, will be implemented starting September 1st. Besides the 15% rate, a lot of details were also announced today. I think these details are actually quite favorable for the EU. For the EU, this is pretty good, and it might even allow many Western countries to use it as a point of comparison or as a reference. This could be quite helpful in trade war negotiations involving the US or other countries, because the EU would become a very advantageous model. So today, I want to share with everyone what important information the EU has actually mentioned in its trade negotiations. Now, moving on to the industry side, the strong alliance is definitely good news for the market. Today, there are reports that 2 major CSP players, one is Google and the other is Meta, are teaming up. Rumor has it that Google has secured a $10 billion contract from Meta. Is this contract a positive for Meta, for Google, or is it actually more beneficial for one company over the other? Today, we need to pay special attention to this news and figure out why they are joining forces. Does this partnership mean that AI development will continue to boom? Or is there a particular company that stands to benefit more from this? We're also seeing some concerns arise. Okay, now another topic that's more related to the tariff war is Walmart. As for Walmart's financial report, it was already released this year. Actually, it was announced just last night. The report is for the second quarter, and the results are kind of mixed. Some of the revenue figures are good, but in terms of profit or EPS, it fell short of expectations. However, revenue actually beat expectations. And with these mixed revenue results, Walmart's stock price saw a significant pullback of about 4% yesterday. So, what exactly did Walmart's financial report mention that's related to the tariff war? That's something worth tracking and following up on. Because starting from August 7th, after the global tariffs are imposed, these large retail companies, especially in the United States like Walmart, Costco, Target, or department stores and Best Buy, are the first to bear the brunt since any increase in cost hits them directly. Once retail prices go up, it quickly gets passed on to consumer prices. And if consumer prices rise, it will have a significant impact on whether the Federal Reserve will cut interest rates, how often they might do so, and by how much. So, whatever Walmart's financial report reveals is something everyone needs to pay close attention to. Alright, let's first take a look back at some of yesterday's economic data. These economic figures are actually quite positive. Just last night, we mentioned that we need to pay special attention to the S&P wink with tongue sticking out global's PMI data for both US manufacturing and services. Both of these figures were pretty good yesterday, both staying above 50. As for the services sector data, it reached 55.4. Although that's a slight dip from last month's 55.7, at least it's still above 50, indicating expansion, and it's even higher than the market's expectation of 54.2. In addition, the manufacturing PMI jumped significantly from the previous 49.8 up to 53.3, not only surpassing expectations but also exceeding the previous figure, and it remains above 50, indicating expansion. So overall, looking at the US PMI data, whether it's in manufacturing or services, overall, the interpretation still leans toward being positive for the economy. At least as long as the US economy hasn't entered a recession, there's no need to be overly pessimistic. It's just that when prices are high, you should consider taking some profits and try to reduce your long positions. Don't go overboard with short selling. After all, the current market isn't heading into a bear trend. Right now, at most, the market might encounter things like statements from the Fed, like Powell or some of the other chairs. Some of their comments are more dovish, some are more hawkish. There's even the possibility of Trump meddling with monetary policy or some behind-the-scenes interference. That kind of intervention. It's inevitable that this will make the market more anxious, and the volatility in the economy, stocks, and currency will definitely be greater, especially now that we're in a relatively high plateau. But it's not quite at the point of turning into a bear market. So what everyone should do at most is take some profits when prices are high, and then as the market pulls back after a big rise, look for good buying opportunities, buy at lower points, trim positions, and set up new ones. Or you can just trade back and forth to respond to the current high-level market conditions. Alright, that's the update on the data that I wanted to share with everyone, which was released yesterday. As for today, there aren't any important data releases, but you really need to pay special attention to what the officials are saying. Okay, let's take a look at the first one. Powell will be making a statement tonight at 10 p.m. Powell will be speaking at 10 p.m. tonight, so if you can't sleep at that time, you can check it out one by one. There are many websites that will continuously update his remarks, posting them minute by minute, one update per minute. As you follow along, you'll notice that tonight's US stock market will fluctuate up and down with Powell's comments. If he leans a bit dovish and mentions preparing for a rate cut or says the job market is underperforming or a bit weak, then the Federal Reserve will take a very proactive approach in adjusting its monetary policy. That would be considered more dovish. But if he suddenly says, hey, at this stage, there's no need to worry too much about US employment data, but inflation, like the PPI numbers, has surged too high and last month's data exceeded market expectations, so inflation, combined with the impact of tariffs, this could be the main reason why the current monetary policy is still reluctant to cut interest rates. We need to keep observing for a while longer, maybe 2 to 3 more months, before making any monetary policy adjustments. If he talks about this kind of content, it would be considered more hawkish. A more hawkish stance would be more negative for the stock market, while a more dovish and accommodative stance would provide support for the stock market. So you really need to be especially careful. If you don't know what to do, it's actually very simple. Before the US stock market opens, around 10 p.m. before the speech, right? The US stock market opens at 9:30 p.m. our time, and then there's the speech at 10 p.m. So either you've already started reducing your positions in the days leading up to this, or tonight is your last chance. When the market opens at 9:30 p.m., you should at least lighten your holdings a bit. This way, you can face the uncertainty of Powell's speech at 10 p.m. It's a method, at the very least, by reducing your holdings, you won't be as anxious. You won't be on edge, even though today is supposed to be a happy Friday, right? TGIF, thank God it's Friday. It's supposed to be a great Friday night, but instead, you're all nervous, worrying about what he's going to say, what topics he'll cover, and how much he'll say. That way, trading stocks becomes really exhausting. So you have to remember, if you ever feel really tired or worn out, it usually means you're holding too many stocks. Generally, if trading makes you feel exhausted, it's a sign that your position size is too large. When you reduce the size of your positions, your psychological pressure will be cut in half, and you'll be able to look at the market changes more neutrally and objectively. You'll also be more objective and rational when looking at current economic data or listening to official statements. Because your position is relatively light, you'll be able to look at things more calmly. But when your position is too heavy, or you have too many losing positions for too long, it's easy to panic or get anxious and make the wrong decisions. It's usually like this, whether it's the Taiwan stock market or the US stock market, it's all the same. Alright, so let's take a look. Before Powell's speech at 10 o'clock, actually, there were already a lot of officials who made their positions clear in advance. And I want to remind everyone, these statements were not really dovish. Most of these officials leaned more toward keeping interest rates unchanged. And as for inflation, there are still quite a few concerns about inflation. For example, take Bostic. What did he say? Bostic isn't a voting member this year, by the way. Bostic said he expects one rate cut this year, but he's worried about the direction of a labor market. You know, at the beginning of August, the non-farm payroll numbers were released, right? The number of jobs was much lower than expected. And then, for May and June, there were significant downward revisions, which made the market worry about the overall labor market. Is it heading toward a recession? That's the concern. So, it's not that the labor market is immediately causing concern, but there is still a chance for one rate cut this year. He didn't say 2 times, just once. As for whether that one time will be in September, October, November, or December, he didn't specify, he didn't say at all. And then there's Harker. Harker isn't a fringe voter either. What did Harker say? He said he does not support a rate cut in September for now. Not supporting it, not supporting it. And as for Goolsbee, he said that the latest inflation data is not ideal, like the CPI and PPI. They haven't dropped significantly below 2%. So, these 3 members, Bostic, Harker, and Goolsbee, are a bit more conservative, leaning toward wanting to keep rates unchanged and not making any rate cut adjustments in September. In addition, among those with voting rights, there's someone like Smed, I call him Smed, voting member Smed. He said that right now, the risk of inflation is higher than the risk to employment. In other words, when it comes to inflationary pressure, they believe the pressure from inflation is greater than the pressure from a potential employment downturn. He thinks the current policy is in the right place, meaning what? He says don't cut rates, don't make any moves, just keep things as they are. There's another voting member named Collins. Collins said that the labor market is also deteriorating right now, but in the short term, she actually thinks it's possible to cut rates, rather than waiting until inflation is completely clear before making a move. So you can see from what we've just discussed, whether it's Bostic, Harker, Goolsbee, Smed, or Collins, these 5 committee members, most of them seem to be telling everyone that what they're more concerned about is inflation spiking. So when it comes to monetary policy, they hope to keep interest rates unchanged. Only one person, Collins, said that a rate cut could be done in the short term. So we can see that these committee members, these chicks, if we use this analogy, the big hen of the Fed is Powell. Powell is leading a group of chicks in making monetary policy adjustments. Now, most of these chicks, at least more than half, support keeping rates unchanged. So it's reasonable to predict that tonight at the Global Central Bank annual meeting, this big hen Powell will probably remain neutral, maybe with a slightly hawkish tone, meaning he'll keep rates unchanged, emphasize maintaining independence, and not be influenced by some of Trump's interference. What's he looking at? He's watching economic data. If inflation spikes, he won't cut rates. If inflation goes down, he'll move toward rate cuts. But can inflation decrease now? Inflation won't decrease. Why won't inflation decrease? Tariffs have already started to take effect. With the tariff war underway, inflation is only a matter of when it rises, not if. The difference is whether it goes up in August, October, or December, but in the end, it will still rise either by a lot or a little. As long as Trump keeps pushing these tariffs, inflation will only differ in how much and when it increases. Unless, say, by September or October, suddenly, if Trump has a change of heart, suddenly wakes up and says, hey, we've collected a lot of tariffs, and all these countries are negotiating well with us on currency and trade policies. Plus, all these countries have completely opened their markets to the US, with no tariffs at all. Everything is duty-free. So, the US will make some adjustments to our tariff rates. If he says that, it's like Taco said, for goods imported into the US from other countries, I'll lower tariffs. I'll reduce them from 28% to 15%, then to 10% as he realizes countries are willing to cooperate. A lot of companies are also willing to set up factories in the US, creating more job opportunities. If this happens under these circumstances, then it's possible that the tariff rates will decrease. If under Trump there's a willingness to lower tariffs, no matter whether it happens in September, October, or November, then what happens to inflation? The upward pressure will be eliminated, and this elimination will help the Federal Reserve adopt a dovish approach to cutting interest rates. Okay, so everything is interconnected. If Trump doesn't step in, monetary policy will remain tight because inflation will continue to rise. If Trump gets involved, then there's a chance for monetary policy to become more accommodative. Why? Because he might lower tariffs, so it all depends on what Trump does with tariffs going forward. When will he make a move, at what point will it happen, and how significant will the change be? That will determine how dovish or hawkish the Federal Reserve will be. So everyone needs to be a bit cautious, because with all these variables, we really can't predict what this old man Trump will do when he wakes up tomorrow. Nobody knows what surprising move he might make. So what should you do? For example, if tonight Powell's speech is more neutral or leans hawkish, then you need to realize that the US stock market will likely continue to be volatile tonight. And as long as there's even a hint of hawkishness, just a little bit of hawkish sentiment or argument comes in, the stock market will easily follow that trend. A significant pullback could happen, and if you're not careful, it could easily be a 1 to 2% drop. So everyone needs to be especially cautious. Of course, you might ask, teacher, what if Powell suddenly decides to give Trump some face and make some more dovish remarks? All right, ST, good night, and also this. Good evening. So, if Powell tonight makes some more dovish comments, like saying, hey, we support rate cuts, we're willing to make adjustments because the job market is somewhat weak, then we're still willing to take easing actions, maybe as soon as September, or even by the end of the year. If he says things like this, which are more dovish, it would indeed be relatively positive for the US stock market. However, on the other hand, if it's relatively positive for the US stock market, will the stock market go up? Yes, the stock market will go up. The stock market will rise, so there will definitely be a large group of institutions or investors who might take advantage of this. With this dovish, positive news, if the stock market surges and they make money, will they sell? Yes, they will. They'll take the opportunity to sell stocks on this positive momentum, because if you don't sell when the market jumps, when will you? Of course, when it surges, you should sell quickly. So when you see positive news come out, let's say tonight Powell's speech is more dovish and the stock market really surges, what you should do is at least take some profits on your long positions along with the market. You don't have to sell everything, you don't have to close out your entire position, that's not necessary. And you don't need to sell everything because you might worry that if you sell, the market could go up again tomorrow and the day after and even next week. Maybe next week Nvidia has its earnings report and there could be more good news. You're worried about selling too early, and that's fine, you can sell in batches. So my suggestion, if it were me holding a position, is that tonight, maybe before 9:30, I would probably trim my position a little bit, just lighten up on some of my holdings. Second, if Powell's speech turns out to be more dovish, then things will likely go that way, right? So the stock market will go up, the stock market will rise. What would I do then? I wouldn't chase stocks. If the market goes up, I would sell again, I would sell again. That's the kind of move I would make. So what if you ask, teacher, what if he's more hawkish? If he's hawkish and you're holding a bunch of stocks and haven't sold, then honestly, it can get pretty tough, it can be pretty rough. So what should you do? Whether you have stocks in hand or you're heavily invested, let's say you still don't sell tonight or you just don't have time to get out. Okay, let's say he gives a speech and it's more hawkish and the market pulls back, so maybe it drops for a day or two. At the very least, you can only wait for the market to pull back, wait until it maybe reaches the 20-day moving average or the 50-day moving average and show signs of stabilizing, then slowly and steadily start buying at lower levels. That's basically the approach. But as for whether it will immediately turn into a major bear market and drop further, right now there's no sign of that happening. At the moment, we don't see that situation. It all depends. It depends on how hawkish Powell's speech will be tonight. Whether he's more dovish or hawkish is really important. But since we haven't gotten his speech yet, there's nothing we can do for now. Also, good evening to Yuan, Xiao, and Sugar. So everyone needs to understand, of course, Trump doesn't want the stock market to go down. But there's no need for it to drop. Regardless of whether he wants it to or not, if the market doesn't need to go down and suddenly the stock market pulls back by 1% or 2% after a 50 basis point announcement. Actually, that's not a small drop either. It's quite a significant move. It's just that when the market pulls back by 1% or 2%, maybe Trump will jump out first and ask, why isn't Powell cutting rates? Powell, Mr. Too Late. Mr. Too Late, you're too late, sir. He might start making some comments like that. As for making statements or gestures, no matter what, I really don't care what Trump says or what anyone else says for that matter. Why? Because we never know what they're going to say. Since we can never predict what they'll say, what you need to do is be fully prepared for anything. Prepare for the worst-case scenario and manage your positions properly. That's all there is to it. Leave the rest to the market to react. Let Powell and Trump say whatever they need to say, but we have to make sure we do our own preparations. This is a relatively safer approach. And of course, since we just mentioned Trump, we can't forget about him. Trump has nominated a candidate for chairman named Bullard. Bullard said, he used to be the boss of the current board member Waller. He said he's calling for a 100 basis point rate cut this year, with cuts starting as early as September and further cuts in 2026. Anyway, his stance is more dovish. Why is that? Because he wants to move up, right? He wants to get promoted. He wants to become the Fed chair. This is a huge position. He used to be just a committee member, and now he's already left. He's no longer there. I think he's now the dean of the business school at, I don't know, maybe Purdue University or some other university. I can't remember which one exactly. Alright, so if he comes back to the Fed, of course he'd want to go straight to the top and be the Fed chair. Will he actually get the job? I don't know, but I think his chances aren't that great. Probably not very likely. I think Waller or Waller's chances are higher. I feel like Waller or Waller have a better shot. As for Bullard, he's always been more dovish. In Taiwan, you can just take note of that because he tends to favor rate cuts. I think the main reason is that he wants to please Trump, you know. As for the US Department of Justice, they said they're going to investigate Lisa Cook. We've mainly been following up with everyone about that mortgage issue. About the mortgage issue, Lisa Cook, right? No, so the Department of Justice? There's an official at the DOJ, not sure if it's a lawyer or a judge, who urged Powell, saying, "You need to remove Cook from the Board of Governors." Why? Because they claim she engaged in illegal or unethical behavior. But all she did was apply for a better mortgage deal. She just provided proof of financial capability or whatever was required to get a better loan rate. And now they're saying that this makes her suspicious of illegal accounting or something. Anyway, that's how they're talking about it. If you want to get rid of someone, you can find 10,000 reasons. But if you want to protect someone, to keep them around, you'll also find 10,000 reasons to hold on. That's the idea. So let's keep watching and see what happens. As for whether Cook will be removed, I think many variables are at play. It probably won't happen yet. So for now, it looks like at least Trump has already secured at least 4 seats on the Federal Reserve Board. At least 4, which is for next year. Isn't the Fed chair going to be replaced? So, at least there's 1 chair, right? Then, as for the current board members, Waller and Bowman are both more supportive of rate cuts, so Trump is also more in favor of that. The other one is someone he newly appointed, called Milan. Milan is also a new board member, basically brought in from outside as an economic advisor, brought in to take Kugler's place. So, altogether, that's about 4 votes, at least 4 votes. So of course, Trump really wants to get 5 more votes, or even 6 more votes in. So now they're starting to target Cook. Anyway, no matter what, we think that the whole market's focus right now is really just on one thing. Just pay attention to Powell's speech tonight, and that's enough. That's all you need to watch. Alright, as for the trade war part, let me add a bit more. Okay, Melissa Chan, good evening, and also good evening, good night, good night. Regarding the US-Europe trade agreement, I think this time the US-Europe trade agreement will start imposing a 15% tariff on September 1st. Some of the details are actually good news for Europe. For the EU, I think this is a pretty strong move. They said that starting September 1st, there will be a 15% tariff increase on EU goods, and it's not cumulative, it's not added on top of the original tariff rate. Unlike in Taiwan, where it might be 28 plus in, for example. So-called cumulative original tariff rate means, for example, let me give an example, maybe today. Take seafood. A 5% tariff. Using Taiwan as an example, seafood was taxed at 5%. Now, with reciprocal tariffs globally, if the US tells Taiwan to impose a 20% tariff, the original 5% plus 20%. 25%. This is called stacking the original tax rate with the current reciprocal tariff. So, what does non-stacking mean? Non-stacking means you don't stack them. Even though seafood was originally taxed at 5%, if you now impose a 20% tariff, you use the 20%, the 5% is not added. It won't be 20 plus 5, it's just 20%. You simply use the higher tariff value. Starting September 1st, for these EU goods, the tariff will be a certain percentage, and it won't be stacked, so if it's 15%, it's just 15%, with a maximum of 15%. Additionally, there's most favored nation treatment, meaning you choose the higher value between the MFN rate and 15%. For example, take seafood. Originally, the tariff was 5%. The MFN rate for the EU is 5%, the US charges the EU a 5% seafood tariff. But with this reciprocal tariff, it needs to be raised to 15%. So, you choose between 15% and 5%, whichever is higher. Since 15% is higher than 5%, the tariff charged is 15%. If today, the EU imposed a seafood tariff of 30%, with reciprocal tariffs, it is 15%. You pick the higher. Who do you pick? What happens then? They won't impose a 38% tariff anymore. At most, in the end, they'll just give you a 15% tariff. That's right, the most they can do is hit you with 15%, so everything will just get a 15% tariff. So for the EU, basically, they won't set the tariff super high. It's like you have an average rate, and you could say that's your ceiling. For most of your products, the ceiling is 15%. If your rate is lower than 15%, like 6.5%, I'll still give you 15%. That's basically the idea. But there's one thing that's really special, something I think is best for the EU, and that's what he said. Just now, we talked about comparing the effective tax rates with 15%, right? As long as the rate isn't lower than 15%, we pick the higher one, right? We choose the higher rate to apply, to implement. But he said, if today we're talking about airplane parts, or cork stoppers, or generic drugs and raw materials, this is the most important: generic drugs, medicines, and then cork stoppers, airplane parts, and these things, right? That means they apply the most favored nation, MFN, tariff rate. Generally speaking, the MFN rates that the US gives to various countries are usually pretty low, often just a few percent, single digits. So what does that mean? It means, except for airplane parts, cork stoppers, generic drugs, and raw materials. For those, what applies is what I just mentioned, the pick one of two, the higher tariff rate. The highest tariff for this can go up to at least 15%. But for the products I just mentioned, they get the most favored nation rate. So if the MFN rate is 5% and the reciprocal tariff is 15%, right? You don't have to choose the 15%, just go with the 5%, which is actually lower. In other words, you're exempt from that 15% pressure. Let me say it again: airplane parts, short corks, water, pharmaceuticals, and related raw materials, these raw materials for medicines, all products are completely exempt. All of these are exempt from the 15%. They will be calculated using the most favorable tariff rate, whether it's 3%, 5%, or 7%, it doesn't matter, but it definitely won't be 15%. What's the benefit of this? Because for the US, the biggest source of imports for the US is European pharmaceuticals. European medicines are one of the largest sources of imports for the US. Many generic drugs, many medicines, if they aren't hit with that 15% tariff today, the tariff might be set very low as 3% or 5%. So what happens to the price? The price won't be driven up. If the price doesn't go up, that's good for the US, because it means prices in the US won't surge. Things like US healthcare and insurance, their costs won't increase. The medical industry's costs won't go up. That's better for consumers and the public. So this time, Trump is directly addressing these details. Airplane parts, warm wood, generic drugs, pharmaceuticals, all of these are completely exempt from the 15% minimum tariff. Whatever the lowest tariff is, that's what will be applied. Okay, so what about this? Of course, let me explain, this is something that, in the past, like with Trump, not during my time, I remember back in early August, he talked about using something like Section 232 to impose significant tariffs on semiconductors and pharmaceuticals. Do you all remember when he said that for pharmaceuticals, in the next year to year and a half, tariffs would be at least 150% to 250%? 150 to 250%, that's extremely, extremely scary. Back then, we gave an example about, what was it, Pune City. I said, if a pill in Pune City goes from $10 to 25 or even $35, that's really expensive. You wouldn't dare have a headache, you wouldn't dare have a toothache. Because if you start hurting, what happens if you start hurting? You can't stand the pain, right? But when a single Pune pill goes from $10 to 25 or $35, just seeing that one pill costs $35 makes your headache even worse. You take it and, oh man, I was supposed to take it to get rid of my headache, but now that it's $35 a pill, taking it just makes my head hurt more. Before, I could take 2 pills and be fine, but now I can only take half a pill because it's just too expensive. But this feeling, you know, so now they're lowering the tax rate on these medicines to match the so-called MFN rate, which is the rate used in the most expensive country. This is actually a good thing for the US, and it's also good for Europe, because after all, the US imports a lot of European medicines, and on the other hand, the EU is removing all tariffs on American industrial goods, and that includes a variety of American seafood and agricultural products. All of them get preferential treatment. So, what impact does this market access have? So what kind of impact does this actually have? Some people say, oh, when it hurts, it really kills you. Toothache isn't a disease, but when it hits, it's unbearable. Right, I remember telling everyone about, what's it called again, those 4 teeth in the back? Wisdom teeth, right, those 4 wisdom teeth. You always need painkillers for that, and back then, no matter what, I just remember thinking, as long as the price of medicine doesn't go up, that's a good thing. If the price doesn't go up, then naturally your head won't hurt, right? No pain. So, what's the benefit of this whole EU thing I just mentioned? With the EU, they're talking about 15%, but of course there are some extra conditions. For example, you might have to invest $750 billion in buying their energy, and then invest $600 billion, invest a lot, $600 billion in the US. That's a ton of money. It's not that much, and you only get 15% in return, plus you have to do a lot of things to get exemptions. This kind of deal will serve as a reference for other Western countries. Some Western countries can't reach an agreement. For example, Canada is still holding firm, right? Mexico is still in negotiations, and then there's India. India is really tough, because they've been hit with a 50% tariff. That's because they import a lot of Russian crude oil, so Trump isn't happy with them. So, India and a lot of other countries are in this situation. It's the same for all these countries, whether they're Western, European, or American. When these countries see the EU negotiating in this order and see these preferential deals, what do? They start following suit and making comparisons. They compare themselves to others, because they realize that there's still hope for negotiations, even though it might come in a higher price. At least there's hope. And sure enough, as the talks go on, who calls? The Canadian Prime Minister, Trudeau, right? Today, he called Trump and the two had a conversation. He said it was a very productive and wide-ranging dialogue, blah blah blah, a lot of things. Anyway, right now, Canada's tariff rate is 35%, which is even higher than Mexico's. Mexico is at 30%, Canada at 35%, India at 50%, and the EU at 15%. Everyone knows these rates, so the negotiations are going well. The more money they're willing to spend, the more they're willing to buy American products, set up factories in the US, and purchase American energy. Then your tax rate will be relatively low. For example, Japan and South Korea might be around 15%. Taiwan about 20%. India reaches 50%. Southeast Asian countries like Thailand, Malaysia, Cambodia, and so on. Indonesia and others, these countries are at about 19%. 19%, that's the general idea. So going forward, I think, Canada will probably follow the EU and Mexico, and gradually something will blossom, and things will slowly unfold. So, regarding the tariff war, just to update everyone, the current situation is that countries around the world have already started signing treaties with the US one after another. It's just like we mentioned before on long time ago, this trade war, with the US waging trade wars against the whole world, really resembles the warring states period in China 2,000 or 3,000 years ago. The era of the 7 warring states, remember? There were the vertical and horizontal alliance strategies, right? So what was the vertical alliance? It meant the other 6 states, Han, Zhao, Wei, Chu, Yin, and Qi, would join forces to resist the powerful Qin state. So, Qin was the major power. What was the horizontal alliance? It was Qin, big state, using threats, leverage, and strategic alliances to deal with the other states, sometimes making distant alliances, sometimes attacking nearby ones. Using Zhang Yi's horizontal alliance strategy, they would defeat each state one by one, by offering benefits or by threatening them. It was about allying with lesser enemies to attack the main enemy. Then, they would divide and weaken these countries. The United States is using this same approach now. The US deals with each country one by one, negotiate with me, I'll give you benefits, if not, I'll go head-to-head. But you can't beat me. Why? I'm the major power, and you need me. So, in this tariff war, the US is using the same strategy as the horizontal alliances among the 7 warring states, using Zhang Yi's tactics. No. In the end, only China is left, not willing to compromise. All the other countries have already compromised, even the EU has given in. I don't believe Canada won't compromise, I don't believe India won't compromise, it's just a matter of time. But China doesn't have to compromise, because China has a lot of things that the US needs. For example, the simplest one, what's it called again? Rare earths. The US can't do without them, because high-tech batteries, energy, turbine generators, and a lot of advanced weapons and defense equipment all need rare earths. And it just so happens that the world's largest producer and reserve holder is China. The country with the largest production is, what is it? China. So China has things that the US needs. Of course, on the other hand, China also needs some of the US's high-tech products, like chips. So between the two of them, I don't think this tariff war will be resolved so quickly. But aside from China, all the other countries have already been won over. Yeah, they've all been won over. I just wanted to add this point for everyone here. Now, the 10-year bond yield or terminal rate is still holding at 4.33 and 3.84. As for rate cuts, today it's been slightly reduced to 1.9 times. Why? As we just mentioned, there are quite a few Fed officials. They're leaning more hawkish, meaning they want to keep rates unchanged. So the number of rate cuts has dropped from 2 to 1.9 times, and that's the reason. Good evening M10, good evening M1. The Democratic Party in the US is now more corrupt, and the news is blowing up. Yeah, you can deduct interest, right? Are you living in the US? I'm not sure if you're living in the US. Maybe you know more about some things in the US. Maybe when it comes to politics, or the perspectives within the white or Chinese communities in the US, you might get more direct or relevant information. Alright, so aside from the rate cut issue, let's look at the US dollar. The dollar rose slightly by 0.1% today, staying above the 50-day moving average. Of course, whether it's above or below the 50-day moving average, a key factor is going to be Powell's speech tonight at 10 o'clock. Earlier, we spent a lot of time explaining to everyone how Powell's hawkish or dovish stance could impact the stock market and what actions you should take. I made that very clear. Remember, the most important thing is to manage your risk first. Now, as for geopolitical risks, let me add here. The US Department of Defense, we were talking about how important China's rare earth elements are, right? Whether it's China's rare earths or other special precious metals, these are very important strategic resources for the United States. Aside from rare earths. Today, the US Department of Defense also announced that it will, for the first time, begin purchasing this metal for its strategic reserves. Because gallium, I'm talking about gallium, the metal with the gold radical in its Chinese character, gallium, they plan to purchase 7,500 tons over 5 years, which is worth as much as $500 million. So, what exactly is gallium? Let's get a basic understanding. Gallium is mainly used in high-temperature resistant alloys, magnetic materials, some missile components, jet engines, and also in the production of aircraft ailerons. If you look up pictures of aircraft ailerons, you'll know what I mean. It's not the wing itself, it's a small part near the wing, with components controlling various functions. Not the spoiler either, but it controls the plane's takeoff, landing, or other functions. That's called an aileron. You can look it up. This also includes items like landing gear, magnets and flight control panels, and so on. All these rely on cobalt as an essential raw material. That's why the US wants to strengthen its strategic reserves of these important materials. But in my opinion, to some extent, this is related to trade dominance. Okay, so moving on, Trump said that regarding the Ukraine issue, in about 2 weeks, he said, we should know whether or not negotiations will succeed. 2 weeks, so let's just wait and see. Anyway, this issue doesn't have much impact on energy risks or the stock market right now, so 2 weeks is simple enough. What date is it now? It's August 22nd. 2 weeks, so add 14 days, which means before mid-September. So, before mid-September, we should know how the talks between Ukraine and Russia are going. Will the trilateral talks produce any results? I think in about 2 weeks, things will pretty much settle down, and everyone will know. As for the Israel part, Netanyahu has said that all hostages in Gaza must be released, and Israel's goal is to completely eliminate Hamas and take full control of Gaza. We'll just have to wait and see what happens next. We talked about this story yesterday. The second generation of mechanized armored vehicles for the Gaza takeover has already started, and it's moving forward. So, crude oil prices are still relatively weak at the moment, dropping by 0.14%, which doesn't have much impact on the overall market or on prices. The inflationary effect is also not very significant. So there's no need for everyone to worry too much. As for earnings reports, most of them have already wrapped up for now. The next key earnings to watch are on August 28th, NVIDIA and HPQ, which are both very important. At the end of August, we'll also have earnings from companies like Dell, Marvel, and Lululemon, so there are about 5 major companies left for the end of August. As for the earnings reports coming up in September, they'll gradually start picking up again, with a new round of earnings reports rolling out. So, we'll continue to track these developments together in our group's English program, keeping an eye on the industry trends. We'll see whether these strong partnerships are actually positive or negative for the market. There's some breaking news about a powerful partnership, 2 major companies, one called Google and the other Meta. According to Reuters, it's been reported that Google has secured a 6-year cloud service contract from Meta, valued at around $10 billion US. So what about Meta? Meta will start using Google servers for storage, as well as network and related equipment, to support its AI workloads. Why is Meta turning to Google? It's simple, because Google's cloud infrastructure is highly developed and very profitable. As for its financials, Google's cloud division reported $13.6 billion in revenue in the second quarter, a year-over-year growth of 32%. That's really impressive, things are going well. So if Meta really does, as expected, purchase Google's equipment to support its AI operations or workloads, what does that mean? It means there are two reasons. The first thing it means is that Meta's demand is huge. What does it show about its AI development? Its demand is so great that it can't meet it on its own. What it has isn't enough, so it has to borrow or use other people's products. So, first, its demand is really big. Second, to some extent, it might also indicate This investor said that when it comes to Meta's cloud-related infrastructure, like storage and network equipment, maybe the cost of building it themselves is just too high. So instead, it makes more sense to partner with Google or to rent Google's equipment. Using Google's hardware and services to run their AI computations works just as well. You could also look at it from this angle. So, if you ask who benefits more from Google getting the map order, in the short term, it looks like Google benefits more. At least Google gets the order and actually receives the money. As for Meta, even if they get the equipment, they still need to use it to further develop their AI. So what does Meta have to do? They've already burned through $10 billion in costs, and they need to make even more money and develop even better technology if they want to recoup that $10 billion. So in the short term, they can't see profits like BMWs. So, in the short term, who benefits more? Google benefits more than Meta. But what if Meta really does get better and better in the future, and AI keeps developing and they invest even more money? Haven't they been poaching a lot of talent? They're headhunting everywhere, making enemies all over the place, right? So, with so much talent coming in, if they bring in the right people, get the equipment, and sign all these contracts, and if their AI really does make huge leaps forward, then in the long run, it would be a big positive for Meta. But right now, we can't see it yet. We can't see it now because they're still in the integration phase. Right now, they've brought in so many resources, so much equipment, and hired so much talent, but they're still working on integration. Whether or not that integration will succeed is another headache entirely. So at this point, all I can say is that Google landing this 6-year, $10 billion contract from Meta is definitely a short-term positive for Google, if this rumor is true. Oh, to some extent, this means Meta's in-house development is burning cash too quickly. So in the short term, Google's stock price is still steadily climbing above the 26-day moving average, which is relatively strong. Yesterday, it went up by 0.22%, and in pre-market trading today, it's up about 1%. That's still pretty solid, pretty good. Alright, now moving on to Meta. Okay, someone asked about SN and also about Plenty. Teacher, what do you think about Amy or Amini? Let me briefly mention it for you, since I didn't prepare the relevant candlestick charts today. I remember SN is related to nuclear energy, something to do with power generation and nuclear energy. As I recall, those power generation companies, because with the development of the AI industry, there's going to be a huge demand for electricity. So, electricity could come from wind power, solar power, or nuclear power plants. The simplest, fastest, lowest cost, and most efficient way is nuclear energy. In the US market, there are a few companies that specialize in uranium mining, that is, the upstream part of uranium energy development, for example. I remember there are a few companies, like UUUU, the one with 4 U's, or UEC, which is probably related to uranium mining. If you're talking about midstream or downstream power plants, there are some like CEG, or maybe GEV, VST, or others. CG is Constellation Energy, right? I think they collaborate with Meta. Then there are others like SN, which also has small nuclear power plants. Okay, let me be clear, all stocks I'm talking about now are related to nuclear power generation. UUU, UEC, upstream companies mining uranium. Power plant companies like CEG, VST, GEV, or small nuclear power plant companies like SNR or OKL. All related to power generation. But recently, over the past month, these stocks have all surged really, really high in the short term. Especially the upstream uranium miners like UUUU and UEC, when they go up, they shoot from $5 to $10, doubling in price. In just a little over a month, they've doubled, so now they're all going through a short-term pullback and correction after such a big run-up. So, a lot of the ones left that are power plant stocks, like SNOK, in the short term, will also see some short-term moves. The pullback for this one is relatively strong. As for SN, if I remember correctly, looking at its candlestick chart, not only did it fall below the 20-day moving average in the short term, but it also dropped below the quarterly moving average. So, its pullback is considered quite significant. You need to pay a bit of attention here, be a little cautious, because its moving averages have been broken and it hasn't climbed back above them yet. Now, as for Plenty PLT, Plenty mainly takes on some AI and defense-related orders, right? Of course, in the past, some companies with AI-related orders would also go to them. Originally, they were a company focused on big data applications. I remember I've talked with everyone before about Plenty, this company, Plenty. As for their previous government orders, what they're most famous for is, back when the US was going after bin Laden, during the Middle East War, when they were targeting bin Laden, they actually used Plenty's big data software to calculate where bin Laden might be hiding, to figure out which places he could be hiding in. It was Plenty's software that did that. And they've also signed a lot of contracts with the US Department of Defense. So its fundamentals are actually pretty solid. It's just that in the short term, the market thinks its valuation is too high, that the price has gone up too much. I remember its PE ratio was over 500 times, like 580 something times, so that's extremely, extremely high. Yes, it's profitable, but the PE ratio is just too high. Right now, I think the stock price is around 140, and before it even went up to 180 or 190, so it really went up too much. That's why recently it's been going through a correction. But just yesterday and the day before, when it dropped to about the quarterly moving average, it seemed to stabilize a bit. Okay, so that's the situation with Plenty. Is it? So, providing this information, SNR is weak short term. Think of it as a correction after a big run-up. Pay attention to the quarterly moving average. If the stock holds above the quarterly moving average, there's no big problem. But if it breaks below, it's safer to get out because valuation is high. So JN asked whether Powell is speaking at 2:30 in the afternoon or at 10 o'clock. Tonight, Taiwan time, it's 10 p.m. Okay? That's 10 a.m. US time. So for Taiwan, it's tonight at 10 p.m. when Powell will be speaking at the Global Central Bank event. This answers the related questions from Zien and Amy Lee. Okay, as for KKOD, who has lived in New York for many years and has personally witnessed how serious crime is there. Okay, yes, so sometimes it's like this. If you've lived in the US versus if you haven't, the things you know can be quite different. After all, if you're in the US, you might get first-hand information, while for us, we get our news through Bloomberg, Juhing, Yahoo, and lots of other sources. So today, we've condensed everything. Sometimes, we're separated by several coasts. What is it? The Pacific Ocean? Or the Atlantic? Anyway, there's this huge ocean between us before we can get news from the US. So, there are pros and cons. No matter what, everyone here can try to exchange information as much as possible. As for the information part, after sharing, please double-check and verify with each other, because sometimes the information we provide might not be 200% accurate, to be honest. After all, sometimes we have to go live, and when we condense the information, I might start streaming early in the morning. Of course, when we condense a lot of information into a short time, it's inevitable that there might be some details that aren't 100% accurate. After all, we also get a lot of information from various websites and then compile the relevant data to share with everyone. So, there might be some numbers or data that aren't completely precise or accurate. Sometimes, due to time constraints, we have to quickly put together information to share the latest updates with everyone during the live stream. It's inevitable that some data or details might not be entirely correct or fully complete. So we ask for your understanding. Please continue to support our group and our English lessons because after all, it actually takes a long time to prepare all this material, and it's really exhausting, really exhausting. Every week, after I finish preparing, the happiest moment for me is Friday. Because on Fridays, I finally don't have to do a live stream, and when I get home, I can just relax and enjoy a late-night snack. Maybe some salty fried chicken from Dingfin, or maybe a cup of Starbucks or something like that. I feel totally at ease, just like setting sail, haha. So today is Friday, and after class is over, next week I don't have to do a live stream. After work, I'll just go to the branch office to do some investment seminars. So every time I'm doing a live stream, it's like every second I'm on edge, rushing to get everything ready and then go teach. But when Friday comes, I feel especially relaxed. Now, of course, speaking of Google, when we talk about Meta, let me quickly update everyone. I heard that Meta has been poaching talent again. They poached a leader from Apple's team, someone in charge of cloud infrastructure, as well as training and research. This person, what did they do? They brought him in to join the superintelligence lab. Previously, he was responsible for large language model development and cloud server infrastructure at Apple, and he was also involved with Siri. Siri is that voice assistant, Hey Siri, help me find something. Hey Siri, find me a restaurant. Siri. In the future, let me tell you, Siri will be replaced. If Siri doesn't quickly get AI features and become more user-friendly, we won't be using it anymore. Like, I use an iPhone, right? Sometimes when I press it and say, Hey Siri, help me find some information, it just doesn't work. Now I just go straight to Google because Google or some other sources gives me the info I need. Besides using Google for things like finding breakfast places or maps, honestly, these days I get a lot of information not just from Google. I might also look for stuff on, like, there's this one website, what's it called, or I'll go on Anthropic, or really often I use that one from OpenAI. The information that thing gives you is super comprehensive, and it even summarizes the key points for you and organizes everything clearly. Honestly, that's just not something Siri can do. If you ask Siri, it'll just tell you, that's outside my area of expertise, please ask another question. That's the kind of vibe I'm talking about. So, there are so many tools now that can totally replace the C-rate ones. Like I just mentioned, there are so many from OpenAI. So what about Apple? The leader of the Siri department and the entertainment department's new development team, named Frank, was also poached. I mean, I really don't know what Apple is supposed to do now. Who got poached? In total, 6 Apple executives were all recruited by Meta. Among them, the most famous case is that Meta spent $200 million, $200 million, to poach an AI leader from Apple named Pan Romin. They spent $200 million to bring him over. Most people might never see $200 million in their lifetime. Being poached for that amount is impressive, just for one person. Meta's problem isn't money. Meta's issue is that after gathering this talent, they need to integrate and manage them, and that's where the real challenge lies. Meta dropped 1.15% yesterday, so keep an eye on the 50-day moving average. In the short term, let's see if the 56 level can hold. If it does, then there really isn't too much to worry about. Everyone says they like Fridays too, right? I think Fridays are great. It's when everyone can relax. So our group's show is a must-watch every morning. Alright, thank you. Anyway, whether you're watching our group's evening show or the morning show, or even the evening show again, it doesn't matter. Just tune in whether it's morning or night. Some of our classmates, they're really impressive. Seriously, they're so dedicated. They start with the morning call, listen all the way through, then after that, they listen to the group's good morning session. After that, they start watching the market themselves, right? They watch the market, and after the Taiwan stock market closes, before the US market opens in the evening, they tune in to our group's good night show to see what Teacher Jiang is talking about, what stories he's sharing, maybe some historical anecdotes or stories. After listening to me, they're like, hey, after finished class, get ready for the market to open. Get ready to watch the US market. Though they start watching the show before the Taiwan stock market opens, the Taiwan market opens, they trade Taiwan stocks. In the afternoon, they do their homework, watch the evening good night session, move on to the US market. I was thinking, wow, you're watching from morning till night without even taking a break. You're honestly even more dedicated than the teacher. This is really tough. It's not easy at all. I hope that through this process, you're still able to gain something, and that your path in investing becomes more and more stable. If you're able to make money and keep getting steadier, then honestly, that's the biggest reward for us. Seriously. So remember to like, subscribe, and share for us. Okay? Alright, now for the meta part. The 50-day moving average, back at the end of July, there was a gap up here. Just pay a bit of attention to this gap because it might get filled. If their talent integration doesn't go well, then this gap will definitely get filled. What we need to watch for next with Meta is that they've spent so much money, not only buying equipment but also partnering with Google, purchasing $10 billion worth of equipment and cloud contracts. Or is it that they've brought together so much talent, poaching 6 people from Apple, bringing in people from OpenAI, ChatGPT, and even from Google Gemini, recruiting talent from all over? They even spent $14.3 billion to acquire Scale AI, and the CEO is also involved. Bringing all these resources and so much talent under its umbrella, can Meta really leverage this to develop well? That's a huge key point. If things go well, there's a chance the stock price could hit new highs. But if integration keeps running into problems, if there are constant issues with bringing everything together, then what will happen to the stock price? The market will react early, so you need to be a bit cautious. That's an extra note on Meta for everyone. Also, just to mention Walmart at the end, a major player in retail, the industry leader. For Walmart's second quarter earnings report, revenue reached $177.4 billion, which was better than expected. Same-store sales in the US also grew by nearly 5%. GPS at 0.68 actually missed expectations, which is the first time in 3 years that they haven't met their targets. So that's definitely a warning sign. It's the only time in 3 years they've missed. However, they mentioned that their future outlook, whether it's Q3 revenue or full-year revenue or EPS, is all better than their expectations, and they've even raised their targets. Not bad, so the company's top management, in fact, even though the EPS missed expectations for Q2, they're still optimistic and confident about Q3 and the full year. But they did mention one thing. This confidence depends on whether tariffs remain within a manageable range. This confidence is based on whether tariffs stay within a controllable range. How so? Their CEO actually said this time. Didn't they start with tariffs that weren't too objective? After the tariffs, did prices go up? So now, they're already restocking and replenishing inventory at post-tariff prices. As a result, costs are increasing week by week, not all at once. It's not even day by day, costs are rising every single week. He said that right now, costs are increasing week by week, and they expect the pressure to continue into the second half of the year. So what about the company? They're trying to absorb the related cost increases, and so far, the impact on consumers has been limited. The news impact is limited. So the problem lies right here. This is where the issue is. If this tariff war is really growing week by week, just like they said, then if Trump doesn't back down and keeps pushing forward, things will continue as they are. So what does that mean for these retail companies? It means their costs will keep going up and up and up until when? Until they can't absorb it anymore. And then what will they do? They'll pass it on, they'll pass it on, they'll pass it on. To whom? To the vast number of consumers. So when they can't absorb it anymore, why do they pass it on to consumers? That's why consumer prices go up. So at that point, you'll see the CPI and PPI suddenly spike. And when that happens, monetary policy, like I said before, it's all a cycle, just one cycle after another. When costs are high, prices rise. When prices are high, consumers can't afford to buy, and when consumers can't spend, revenues drop. When revenues go down, what do? They start layoffs. With layoffs, people have less funds, and with less funds, there's less spending. It becomes a downward spiral. Then the economy, the GDP, starts to decline, and companies cut back on their investments. So even in the US, consumer spending drops. That's why when C plus I plus G plus X minus M all start dropping, boom, 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 everything goes down, and that's when you see the GDP going into recession. So everything is interconnected. Even though Walmart's financial report told everyone that their third quarter and full-year revenue outlooks are better than expected, don't forget that as long as tariffs keep being imposed, when costs keep rising, as their costs go up, their future gross margins and profits might not be as strong or as promising as they expect. This is something everyone should keep an eye on going forward. Of course, in the short term, Walmart's stock price is still performing pretty well and has shown some gains. This upward trend line, the blue curve, is still holding up pretty well here. Even though it dropped nearly 4.5% yesterday, today we should keep an eye on the 50-day moving average and this upward trend line. As long as it doesn't break below these, and the quarterly moving average hasn't fallen below the 3-zone line, then there's really nothing to worry about. It's not a big deal. But going forward, when the third quarter and full-year financial reports come out, we should pay a bit more attention to concerns about tariffs. Alright, since we're talking about US stock earnings, let's mention some of the pre-market movers. Ross Stores is up 2.31% before the market opens. First Solar is up 1.58%, and Google, thanks to strong earnings and positive order flow, is up about 1.2% pre-market. In addition, companies like Ulta Beauty and Starbucks are also up 1%. United Health Group, which Buffett recently bought back into, is up 0.9% pre-market as well. On the downside, there's a company that's down 5.1% pre-market due to its outlook for the third quarter. Came in below expectations. Also, Paramount Global is down 2.4%. As for Cinex, Supermicro's computers are also down about 1.5% pre-market, and Nvidia is down slightly by 1%. Overall, I think it's a mixed bag of gains and losses. At these high levels, the most important thing is the back-and-forth volatility. The key is to pay special attention to Powell's speech tonight at 10 p.m. As for what kind of position adjustments to make, everyone should probably pause and take a moment to reassess. Alright, as for the Dow Jones Index, it dipped slightly by 0.34% yesterday but stayed above the 20-day moving average, so there hasn't been much change. The Philadelphia Semiconductor Index fell by 0.49%, and it's starting to correct toward the quarterly moving average. So far, it's touched that level for the second time, so be a bit cautious, it's the second touch now. It's not quite turning bearish yet, but what it's telling you is that a pullback and consolidation after a strong rally has already started. The pullback and consolidation have begun, so it's not going bearish, but you should pay a bit more attention and be cautious with your positions. The Magnificent 7 stocks are still fluctuating around the 20-day moving average, and compared to other indices, they're still relatively strong. As for the S&P Wink with tongue sticking out 500, although it dipped slightly below the 20-day moving average yesterday, it was just a slight dip. Whether it's today or next week, just keep an eye on it. If it manages to get back above the 20-day moving average, then the short-term pullback pressure will be resolved. So, I've highlighted a few key indices for everyone. I've already spent almost 53 minutes talking today. If you can't catch this Friday night session, that's okay. Just remember to listen to the replay. If you have any investment questions, feel free to leave us a comment. Next Wednesday, I'll be giving a talk at the branch office, so if you're interested, you can contact our team. And when class is over, don't forget to like and subscribe for us. Bonus points. Finally, I wish everyone smooth trading, and I'll see you next week.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.